Hey, what's up, Stella? Thank you so much for jumping on the podcast. I appreciate you.
Woo.
Uh, for people that don't even know who you are, can you give like a brief, I don't know, like 1 to 2 minute summary about yourself?
Yeah, for sure. Well, Philip, thanks for having me.
Yeah,
What an honor to be here.
sure.
Well, I'm super excited to chat. I'm Stella. For people who don't know me, I am the co-founder and CEO of Fractional, and we are a platform that helps operators raise capital and scale up for their deals. Personally, for me, I am a real estate investor myself as well.
Mhm.
Started investing in real estate a little bit over 6 years ago now. Personally based out of the San Francisco Bay Area, but it costs $1 million to buy a shack here. So I do most of my investing out of state, and actually did my first deal by partnering with other people, which is why I'm such a big believer of building a team, investing with other people, which ultimately led me into, needing to raise capital for my own deals, going through a lot of chaos there,
Mhm.
needing legal structure, a lot of back office admin help, and come from a software engineering background before all this real estate stuff
Really?
happened. So that was kind of how I internally kind of bridged a lot of gaps in my head where I'm like, okay, let's really bring technology into real estate. Let's, streamline capital raising. So that's what I spend, 200% of my brain cells on now is how do we really build a great product that helps people team up with other investors, raise capital, do bigger deals, do it with a community. So
Mhm.
yeah, that's what I'm all about these days.
Okay, well, that's a lot to unpack there. Um, it's funny that you end up like mentioning that you used to be a software engineer. Uh, did that lead into developing? Do you do any coding yourself on Fractional, or is it just you hire as developers out there just to do it for them, do it for you?
Yeah, in the early days I did. So my co-founder Carlos and I, we actually were both software engineers at the same team at Affirm, which is the company we used to work at. It's a buy now, pay later business. So we both worked on the same team there. We are super great friends. We were coding and building projects there. And we would spend I remember a lot of our lunches at the office talking about non-work related stuff, and real estate came up a lot. So it was kind of our little side project at that time, and we still had our W-2, just
Uh-huh.
kind of building different real estate projects together, trying to make mini first launch versions of Fractional. So yeah, early days I was still coding. I think most of my code has been deleted now, 4.5 years into the business. So yeah, not actively coding these days. I still run some SQL queries here and there to
Uh-huh.
pull data. But most of my time is, working with really awesome operators like yourself, seeing how we can help them scale up and raise capital super, super easily.
So you transitioned from a role of software engineering into more of a relationship building role as as a co-founder.
Yeah,
Okay.
exactly.
Okay. So let's just say walk me through the experience as if I was a new person on the platform and I was the investor, that I had a job, kind of like what you were before a software engineer, because I used to be a software engineer. And I had money to invest, and I jump on Fractional website. What can I expect as a brand new person that has a lot of money that's sitting around that I want to deploy?
Yeah, that's a great question. So I would say for the end investor, there's kind of two different paths here. One is what you mentioned, right? Maybe you're a software engineer, and maybe you don't have a network of real estate investors,
Hmm.
right? But it's you're curious about real estate. You hear about Fractional, and then you make an account. So here it's this investor, potential investor, they don't really have someone in particular that they want to work with already.
Yeah.
So essentially, they join the platform, and then we showcase hot projects that are pretty much going on in the broader ecosystem. And then a lot of operators, they will host Zoom calls, kind of more face-to-face, rapport building sessions where they can talk about their business plan, things that they've done in the past. So there's a lot of discovery. So it's for an investor who's just coming in, they don't really work with anyone already, then they would just get a ton of exposure into other cool things that are happening on the platform, be able to check out those business plans, attend the Zooms, and then decide, hey, do I want to invest $5,000 in Philip's deal, right?
Hmm.
To maybe buy a landscaping company or do a flip or whatever it is, right? So that's one route. And then the more common route is actually investors who already have an operator that they really want to work with. So, Philip, for you, right? Like you've got really great influence, like people trust you a lot. They want to work with you. So, next time you have a project that you want to raise capital for, likely you're going to tell your network first, right? Like you're going to tell people in owners club, sub two, just, within your greater social media where you're like, hey, I have a new project I'm launching. I'm looking for partners. I'm looking for capital. Like who wants to join? So then you'll get a lot of investors just coming in from your own network that want to work with you as like their sole operator already. So that's kind of like the second channel that we actually see as more popular and more common, where people join Fractional to work with a specific operator, just because trust is like such a huge aspect of investing, right? It's like, how much time would it take for you to build enough trust with a random person you're just seeing for the first time to give them, $5,000 plus versus someone who's like known about you, has worked with you, has been following you, right? It's like likely the second option is
Right.
a lot smoother and something that's a lot more impactful.
No, that makes sense. And you ended up mentioning earlier in that summary where you list out all the hot leads or the hot deals. What classifies a hot deal to Fractional?
Yeah, something that has a lot of momentum. So from what we've seen, the Zoom launches that the operators do, those are usually very high impact just because there's so much energy, right? Like you're inviting, let's say like 100 people in your network to like now come on live with you on the Zoom to like, and then you get to talk about, the newest project you're working on. That just like has so much energy. You have like so many eyeballs at the same time. And usually if a deal or an operator is, something or someone that, the community is really excited about, people can even get their entire project just fully funded and even oversubscribed like by the end of a 1 hour Zoom. So
wow.
That is obviously like an insanely hot deal, right? But it's like, say within launch, it's like you're 50% subscribed already. Maybe you're 70% subscribed, right? Like those are all really good signal where it's like, to us as a platform, it's like, wow, people really believe in you. People really believe in the project. So, we want to expose, projects like that and amplify it to, other community members who, maybe don't have an operator they work with so that, they can see what other people are really excited about.
Okay. So it's based on like performance of funding, like how fast the project is funded, and I guess the momentum and speed. Other than that, is there like, I'm sure you guys use an algorithm to classify this, or do you guys like look at different KPIs or metrics on the back end and you kind of push that up into the feed or the front page of the website?
Yeah, mostly traction on the deals. We do track like what types of project things are. So it's like if someone did a co-living run, right? Like we'll likely try to surface that to someone who follows like a co-living tag, just so that they see more stuff that they're interested in. So that also plays a factor as well.
And to go on the topic of co-living and then all the other topics that it kind of stems off of that, that's just one asset class. How many asset classes do you guys cater to? Is it any and all, or is it specifically in real estate? I know there's some business buying in there, but kind of like walk me through that.
Yeah. So overall, as a platform, we're asset agnostic. So we can work with anything, but we definitely started out with a focus on real estate, just because like that. I mean, that's like where my background comes from. Like that's what my co-founder and I were doing manually ourselves, anyways. And obviously, like real estate just has like so much demand, right? So that's like where we started out as. But we always had a vision where it's like, people should be able to fractionalize anything, right? Like that's why it's like even the name is more generic. It's just fractional because our end goal is like, yeah, like people should partner, people should raise capital, people should like do anything and own anything that they want together. So the next immediate vertical that we're going into right now is business acquisitions. I know I reached out to you to talk about that. But that's definitely like the next big thing that we're really excited about. We just had a laundromat purchase happen very recently with someone that we both know. There's like a candy store purchase going on right now. We have people wanting to like buy like country clubs and like golf ranges together. So yeah, I mean, the world is our oyster. Like, we want to support people in pursuing like any sort of venture that they want.
That's amazing to hear because like for me as a, like let's say I was like a person that had a job and I didn't have any of these resources that you and I currently have right now. I could just basically go on this platform and say, hey, I actually want to have all this like a la carte investments to me, like real estate and business, and I can basically pick and choose what I feel like might be the best for me. Now, let's say I want to pick like all of like, let's say I had like $10,000 to like invest. Like, what is the bare minimum that I could invest in each potential opportunity? Is there a minimum investment that you guys look for, and what that might be?
Yeah, so generally on the platform, it's $5,000 minimum.
Okay.
But for each project, it is case by case though, just because the operators, they set the terms, right? Like for example, me as an operator, because I work with so many people already, like I don't really mind working with a ton of investors in one group. So I might just be like, okay, that's fine. Like I'll make my minimum investment for my projects 5,000.
Okay.
And then we have other operators where like they prefer a more intimate group. They don't like working with too many cooks in the kitchen. So they may be like, okay, I'm going to work with like 5 people max. And because of that, naturally the minimum will likely be higher, right? So they might have like a 25K minimum or even a 50K minimum, right? So that's why it is kind of like case by case. But overall, right, like just because it is a joint venture, it is an investment club, we are just opening up so many more doors in terms of accessibility. And with that, like you get more opportunities of diversification too, because traditionally, like let's say you have 100 grand, right? Like that can maybe just buy you one house. Yeah. And if that venture doesn't work out, then you're kind of just screwed over, right? Versus now it's like, okay, well, what if I, split my 100K across like 10 different projects, right? Or maybe something you have a little bit more conviction on, you can like double down on it slightly more versus like something else that you just want like exposure into. Like that's, I think, a really great opportunity. Like personally for me, when short-term rentals were like the craze, I was like getting so much FOMO, but I'm like, I've never like operated an Airbnb. It sounds like a lot of work. Like I'm not exactly sure if I want to get into it, but at the same time, like I didn't want to miss out on that. So I'm like, okay, you know what? Like, let me just throw in like 5K into this Airbnb project and just see how it goes, right? Like worst case, whatever, I just lose 5K. It's like not the end of the world. But then like I would have gained like what that kind of investment and what running that kind of project is like to then make a call for myself on like if that's a strategy I want to double down on.
And to like kind of go on that particular point, I know every investment that anybody makes will have risk involved. So just if you're watching this, listening to this, just understand that there's risk in everything. Even waking up in the morning is a risk, right? So with that being said, does Fractional do anything on their end to vet the person that's raising the funds and any protection towards the actual investor that's giving out the money to the requester by chance?
Yeah, great question. So we do identity verification on all investors. So that includes the operator who is like leading the group and all the investors who are participating, because what we're doing is like we're allowing people to form joint ventures or investment clubs. So it's like you're actually getting into business with all these partners, right? So it's like we want to make sure that everyone that's doing business with each other, it's effectively like a marriage, right? Like it's like you want to make sure like everyone is who they say they are, like no one's on some sort of like financial crimes list, no one's a criminal or anything like that, right? So that's something that we check is everyone has to go through identity verification to participate and actually invest. But then in terms of like the deal, we're not a financial advisor, so we can't say like, oh, we think this is a good deal and this one's not. Like that is the investor's own responsibility to like do their own due diligence and decide like whether or not they think this opportunity is a right fit for them. And then like as part of the due diligence, it's like you definitely want to make sure like the deal structure you feel like is the right amount of risk for you, right? It's like, if you're doing lending, it's like, is there a promissory note? What position, right? Are you comfortable with those terms? If it's equity, are you comfortable with the amount of equity? Are you comfortable with just a JV agreement, or do you feel like, the LLC you're a part of has to be on title, right? Like those are very personal decisions where, we just as a company can't really say anything because it's just so different for everyone, right? So we really emphasize like, hey, it is your responsibility as an investor to like call the shots on this, do your own due diligence, even negotiate if, maybe you really like the operator, but you just feel like, their terms are like not something that, is okay for you. Like it's an open conversation, right? It's just like doing regular business. So that's something that, we heavily encourage on our end.
That's good. That's good. Because like you guys have that as a disclosure for anybody that's looking to invest. As a I guess as a lender or investor, not the operator speaking, is there any cost to the platform to join the platform as a investor, or is it completely free until we get married to the operator?
Yeah, it's completely free to make an account, lurk around, do whatever. Same thing with the operators too. Like we don't make money as a company until a group is actually successful in their raise and they're actually like officially coming together to go, either buy a property together, lend money, buy a business, whatever it is. Yeah.
Okay. So we've talked a lot about the investor side of things, the person that's giving the money. Let's talk about the operator side of things. So as an operator, let's say I want to raise money for, let's say, an RV park, or let's say for a business, whatever it may be, right? What are some of like the key features and benefits as a person like me to go on the platform? Yes, I get more eyeballs. Yes, I get, potentially pitch my opportunity to, maybe hundreds of thousands, maybe millions of people. But besides that, like what is the benefit on Fractional versus, any other, ABC website?
Yeah, I mean, I think, what the true unlock here is like we are just providing so much efficiency in the capital raising process, right? Because when you think about capital raising traditionally, one, just from a time perspective, you are, spending at least 4 to 8 weeks working with a lawyer on like getting everything set up, like legal structure, and then you're chasing down your investors. Like that is, 2 months lost from like not actually raising the capital. And like, you likely put an EMD down on the line at this point too. So it's like even more risk of potentially losing out on the deal because you're losing time on raising the money. And that is like a huge deal for operators, right? So from a time perspective, we take 4 to 8 weeks into pretty much just one click on the platform where you can just click one button to start a project, put your business plan in there, and you can start raising capital the next second, right? So that is a huge value add. The second one is around compliance, which I think is super important, especially if people are raising money, right? Like compliance is a huge thing. You like definitely want to make sure you do things right. Like you don't ever want, the SEC to come knocking at your door and being like, you're doing this completely wrong. Like that just could impact so much things and like effectively like cost you your whole business even, right? So that's something that we take care of as well. We actually have the former senior counsel of the SEC as our legal counsel to make sure like everything is set up correctly. And we can talk about this more later on as well, but everything on Fractional is actually not a security, which is why we're able to like open doors and just make everything really driven with efficiency, like from the product perspective too. And then the last factor is really around like access, right? Because it's not a security, it allows you to unlock a whole new network of unaccredited investors. Like usually when you're thinking about raising capital, you're like, okay, I need to go find these people with like 50K, 100K, right? But you likely have people from your network asking you all the time, like, hey, how do I do a deal with you? I don't got like 100K, but I have, 10, 25 lying around. And, you take 4 people with 25, like that's 100 right there, right? So like that capital has been traditionally really hard to access because things are done as securities. But because, on Fractional, we support joint ventures, investment clubs, and streamlining all of that, it's like now you're unlocking a whole new pool of investors from your network that you didn't really get access to before. And then we streamline all the complexities that traditionally come with like working with smaller check investors and just make that super simple. So like the easiest way I put it is like Fractional makes working with 50 investors feel like you're just working with one investor.
That's a good way to put it.
Yeah.
So, I mean, that's ultimately you have the, is it the, like a chairman of the SEC on your board or whatever?
Yeah, the former
The
senior
former.
counsel of the
Yeah.
SEC. Yeah.
So it's not considered a security, but I am pitching a security in a sense of like it's an asset. Since I guess how I'm like kind of thinking about this is like normally for me, if I wanted to raise money for an accredited investor, I had to open a fund, which is just I guess a vehicle where I can raise money for accredited investors. That's basically dictated by the SEC. But now you're telling me on Fractional, what you're telling me now on Fractional that I'm not tied to those regulations. But how can that be? Like, is it just because it's open to the public? I'm kind of confused on
Yeah,
how
great question. So the biggest difference in whether something is a security versus not a security is just, are your investors actively participating with you in how the project is run, right? So in a security, like all your investors are passive, like they are just handing you the money and they are completely silent for everything else. And obviously, the SEC wants to protect the
Yep.
consumers, right? So they're like, okay, well, if you're just going to hand someone the money and you have no impact on how the investment is going to go, like we want to make sure things are done right and it's all set up, etc., right? Which is why there are all this regulations around it. But for what we're doing, it's like, hey, we actually believe in the power of a community, right? Like we believe that investors want a seat at a table and like they get to vote on like key decisions on where a property is going or a business is going, right? With an investment club, for example, like Pace Morby, he raised $1 million for his investment club, and everyone in this club, they're trying to lend to fix and flippers, right? So it's not like, people just handed Pace $1 million and he gets to do whatever he wants. It's like, okay, we all pulled $1 million together as part of our investment club. Now Pace is going to bring deals to the club that aligns with the club thesis. It's like everyone joined the club because they want to lend money to fix and flippers. So now Pace is going to bring, deal one and be like, hey, I found deal one. This is my underwriting of it. I think deal one fits our investment thesis because of like ABC reasons. What does everyone else think? And then everyone actually has a vote. They get a vote yes or no on whether or not, they think the deal that Pace brought actually does fit the thesis and is a good idea, right? So if Pace all of a sudden was like, yo, I found a yacht, like, let's go buy this yacht, like, people are clearly going to cast no, right? They're going to be like, what? Like, that's not what we talked about. Like, we're not going to go invest in this. So it's like that active participation. That is what makes everything on Fractional not a security. And because it's not a security, you can do business with anyone, right? Like no one said you have to do business with accredited investors. Right. You can do business with whoever you want. So that's really what we're, empowering as a product is like, how do we streamline active participation? How do we really leverage the power of a community and just like involve everyone so that not only are they investing blind or passively, it's like they actually understand what's happening, they get to learn, and then they get to make money, hopefully, right, at the same time with an operator that they really trust.
So that's amazing, actually. So that had more clarity in that particular, like, I guess, summary than I anticipated. So let's just say in Pace's scenario, he brings a fix and flip property to the group and everybody but like a handful of people says, no, that's not what I signed up for. What happens then?
Yeah, good question. So that is part of the streamlining we're doing is like, how do we make voting and decision-making efficient? Yeah. Pace's club has 50 people in it. Like there are a lot of people in the club, right? Yeah. So one thing is we have this idea of a quorum, which is like what counts as a valid vote. Good deals move fast, right? Like you don't got time to like wait around for like 2 weeks for people to cast their vote. So it's like, we set a strict deadline where it's like you have 1 business day to cast your vote, and the vote is considered valid if, let's say 60% of the club members based off of ownership cast their vote. And then based off of the votes voted, you can set another threshold for like what approval rate is needed for a decision to pass. So it could be like, you know, maybe for like the deals, right? Like you want a higher majority because it is probably one of the most important decisions that a group is going to make together. It could be like, hey, you know, assuming a quorum is met, we want 80% of the votes voted based on ownership to agree for the whole club to move together. So in that way, it's like you have pressure and deadlines in, you know, how much time people have to vote. And then there's also a baseline for like what counts as a valid vote where, you know, you don't have to wait just because one person is like in, you know, Hawaii for vacation and just like didn't check their phone, right? So it's like, that's why there's a quorum. And then you have another threshold for like what amount of people have to say yes for the club overall to just agree that they're going to move forward as a club.
I see. Okay. That's so do you have to, as the operator, do I or would I have to do this every single time a decision? Let's say we bought the property. Let's say we invested in the property and another decision comes up. Would I have to, as the operator, cast another vote every single time a decision has to come up?
So you only like major decisions that will like really impact the direction of the business. And we have different categories of these two just to streamline the voting even more. Like something that is important, but like not mission critical could be like, you know, firing and rehiring a property manager, right? Where it's like, it could impact, you know, your business, but it's not like the most like crucial thing ever, right? Versus like selling your house, like, yeah, you know, that's probably like one of the top 5 things that's like important for the investment, right? So like, you know, hiring and firing a property manager, like maybe it's like, you know, you just need like 60% of people or of votes voted to be like, okay, yes, you know, we're cool with whatever, you know, Philip suggested. But, you know, selling a house, doing a refinance, maybe you want, you know, more people to agree before you move forward, right? But then things like, oh, you know, like the toilet is broken, like do we need to fix that? Like those things do not need to get voted on. Like they're just so trivial where pretty much like the operator, especially if there's even a property manager being hired, right? Like the property manager will usually even just like take care of those things. So like more day-to-day, like trivial decisions, they don't need to be voted on by the group.
Okay, so it's just the major entering a deal, exiting a deal, and then probably a capital call if for whatever reason it goes over.
Yeah.
That makes a lot of sense. Now, let's say the minimum investment was like $5,000 in this particular deal, and let's say I put in like $10,000. Do I get more of the pie as far as equity? Let's just say there's equity involved, right? How does that differentiate from a minimal amount to like an exponential amount or whatever in between?
Yes. So the standard is everyone's equity is, you know, their money in divided by the total amount of money being pulled together for the deal. So you would get, you know, say it's 100K total, right? And you invested 25K, then you get 25% of the LLC. And that means you get 25% of, you know, the appreciation when, you know, when you're selling the property. You get 25% of the cash flow. You get 25% of the depreciation when we're reporting for taxes and all of those things, right? So that is the standard. It's just like completely pro rata, just like your money in over total amount of money in. But people can get creative as well. Like for example, like, you know, people can get creative equity if, you know, they're being the personal guarantor in a mortgage, right? Like they're definitely taking on more risk, you know, compared to everyone else in the group. So, you know, I think it's pretty fair that they ask for a little bit more equity over the money that they're putting in, right? Or maybe like, you know, we've seen other groups for short-term rentals, for example, where they didn't hire a property manager. They decided to have a subset of people within their group actually just self-manage the property. And those people were like, hey, you know, like clearly we're doing more work than, you know, the average group member here. Is it okay if we get like an additional 8% of the rental income? And everyone in the group voted yes for that because it's like, yeah, like, you know, hiring a property manager, you're paying them 20 to 25% of your rent. And, you know, they don't even own the property, right? They have no skin in the game versus like our fellow partners who are doing this deal with us. They want to self-manage it. They have the experience. Like, heck yeah, I pay them like 8%, right? Like
Yeah.
that's way cheaper than the other option. And they're incentivized to make this deal go well because they own part of it too. So definitely like lots of ways to be creative on top of just like, the standard pro rata.
And that's pretty smart. That's actually really smart. Like that creative structure. Man, I wish I'd have done that actually. It's so much easier for me.
Not too late, Philip.
Yeah. Okay. So it sounds like there's a lot of paperwork involved just in the transaction between lender and operator. I'm assuming the platform and past experience from what I heard that you guys manage all of the legal paperwork. And like as a I guess as an investor, as an operator, like I don't want to be managing paperwork. I want to be either managing the asset or helping the investors out. Is that kind of fair to say that you guys do all that and you guys do it in perpetuity for as long as the LLC exists within the platform? Is that correct?
Yes, 100%. You definitely hit the nail on the head right there. So we want the operators to focus on what they're actually here for, which is operating and, collaborating with the investors, right? So we take care of all the legal setup. We'll create the LLC. We create a customized operating agreement for the investors that are doing the deal together. We create a business account. We set up like the EIN, all that. And then every year, we're doing the tax filings. We're creating K1s for all the investors. Like you literally don't even need to hire your own CPA. Every month, we're doing bookkeeping. Whenever there's profit distributions, we're automating and streamlining all of that. So you're saving yourself from like having to hire a lawyer, dealing with all that. You don't need to hire a CPA. You don't need a bookkeeper. You don't need a VA. Like all of that is just one-stop shop on Fractional.
So you're saving me some brain damage. That's great.
Yeah, exactly. Brain damage and money.
Yeah.
Yeah.
That's amazing actually. That's like a all-in-one so it's compliance, it's capital raising, and it's all the other admin stuff in between, like basically transaction coordination between all parties, which is a really great, I guess, service you can say to both parties that are actually on the platform. Kind of switching a little bit gears here real quick in regards to raising money as the operator. Let's say I just suck at making pitch decks. I suck at everything with description. I'm just the worst. I can get the deals and I can get photos and I can just post on the platform. Do you guys have like a guide? Do you guys have anybody that could help me as the investor or the operator that's looking to raise money? Like, do you guys have like a coaching thing? What do you guys say that I could use as resources as an operator?
Yeah, that's a great question, a great thought. So right now we don't have coaching necessarily to like get people there. So what we do offer is like a concierge. Like we actually bring in our concierge team to like make sure we provide resources to people who like obviously are great operators and maybe are a little bit newer to capital raising, just like being resourceful in like the different structures of how things go and like how they can actually put a project together on Fractional. We have our director of investments like work one-on-one with our operators as well.
Okay.
But it's like at the end of the day, like you still do need to have some of your fundamentals down, right? Like we unfortunately don't have the bandwidth to like teach you how to make a business plan or a deck, right? Or like we can't handhold you on like how to be good at public speaking. Sure. That's not something that, we really have bandwidth for right now, but, maybe potentially in the future. And, another thing to think about is like, hey, if you're a really killer operator, but, you're just not super experienced in like, building a public image or like, communicating and like building yourself up, maybe find a partner who is really good at that, right? We actually saw a deal not too long ago where we have one very successful operator who is also amazing at capital raising too. You and I both know him. It's Michael Manatsakanian. He freaking killed it, for his personal projects. And then someone who was part of his network also was doing co-living, hasn't raised capital before. But, he reached out to Michael and was like, hey, I have this really great deal. Like, I want to find partners for it. Would you be down to partner with me on it? And then we can work together on finding more partners, right? And that is like such a great like win-win collaboration moment because it's like you're basically blending in your strength with someone else's strength and then also bringing in partners together to do this. So I think that's another angle to explore to like, you know, get your reps in where, you know, you kind of get a little bit of mentorship with someone who has been successful at doing it. Then you like get to do it in real time with an actual deal, bring on investors, and then, you know, maybe fly solo in the future.
Yeah. And yeah, that's a great point. You can always partner with somebody and within the platform itself. And also, I don't know if maybe as an operator, could I see past funded projects that did very, very well and kind of mimic their outline or their pitch per se, their presentation? Is that something that I could look at as a library?
Yeah, you can. Like you can join like different people's communities. For example, like I mean, Pace and Sub2
Yeah.
people obviously do a phenomenal job, right? Like that's probably the easiest way you can like find some really killer projects is like join Pace's community on Fractional, and then you'll see all of Pace's deals, and then you'll see, you know, all these amazing like Sub2 people's deals. And yeah, like, you know, and we post the recordings from the Zoom calls too. Like see how they, you know, talk about their vision and how do they showcase people the underwriting and the numbers, right? And like, what do they have in their project? I think, you know, you don't need to reinvent the wheel, right? Like definitely like just take what has worked for other people and then, you know, bring your own network. I think that's another part that's really, really important is like, you want to essentially like have your own unique advantage for like why you're going to win, right? And that's something that I don't think, you know, enough people in Sub2 realize is like, we're all a part of the same network. And, you know, in some way or another, it's kind of like we're competing against the same resources, right? So something that I've been telling more people, at least within Sub2, is like, hey, you know, don't just rely on Sub2, right? Like Sub2 is obviously great. Like, you know, there's a ton of energy, a ton of people who want to invest, but, you know, they also get to see 10 deals every single day, right? Like that is a lot of competition for you. But you know, maybe your family, maybe your friends, maybe, you know, whatever, you know, profession you work at, right? Like for me, software engineers, you know, they don't really know much about real estate, right? Like I'm like probably one of the few real estate people that they know. So like, you know, they're not like Sub2 people seeing like 20-25% deals like every single day, right? Like they might come to me and be like, oh yeah, like I know Stella personally, I've seen her work. 8%, whoa, you know, that's way higher than like my, you know, 4% high yield savings account right now. Yeah, you know, they're just happy, you know, investing in an 8% deal, right? And that is a unique advantage that I have as an operator, right? So that's like something that we've been pushing more people to really understand and reflect as well, is like, what is your unique advantage? Are you like a unique entry point to your network to get into the types of opportunities that you're doing and, you know, really take advantage of that?
That's awesome. Actually, that's great to understand and like kind of like get a, I guess you can just bring people that you have in your own community that's not in Sub2, right? And into the platform and then nurture them and then basically guide them through your deals, which is actually amazing. Now, to kind of go off of that, are there any additional features that you guys are building out right now for Fractional that you guys can speak about, or is it going to be a hush hush kind of thing?
Yeah, I mean, right now, you know, we definitely have a lot of, you know, features we're trying to build to just streamline the overall process even more. So like, for example, you know, right now so we have this concept called like a deposit stage, which is almost kind of like borrowing the concept of an earnest money deposit. So usually when people raise capital, they get soft commitments first. So it's just like someone verbally saying, oh yeah, like count me in, I want to invest in your deal. But that actually doesn't mean anything. Like people flake on you all the time. I had a personal deal of mine that just completely shit hit the fan. Like I lost half of my investors 2 days before closing. Like they all just flaked on me and never sent me the money. So we're just like, never again, like earnest money deposit is like a concept for a reason. Like we want to make sure whoever says they're going to invest, like they actually like, you know, like put some money down to like commit and hold their spot. So that's like a concept that we have on the platform. And after basically like all the deposits are collected, where it's like the full pledge amount has been reached, that's when we like kick off our whole like LLC building, operating agreement building stage. And that part is still a little bit more manual today, where it's like we're manually bringing our legal team, our team to like work with the investors to like explain what the operating agreement is going to be, have them make choices on like how they want to vote and things like that. So it's just like a little bit of downtime between like fully pledged versus like everyone wire their money and like we're signing the docs and all those things. So it's like we want to bring more of that onto the platform as an example, where it's like, okay, when you pledge already and make your deposit, are there opportunities where you can already just start learning how the operating agreement works? Maybe already there, like you cast how you want to vote. Like, oh, I prefer, voting based off of my ownership rather than by head count, right? So it's like really just like bring more of this collaboration, streamlining more of that onto the platform, because that's really like how we're going to scale as a company, and also how the operators and the investors get a scale, right? Like as they raise more money, they're likely going to be working with more and more investors, right? Like Pace is working with 50 people per club. How do we help Pace run 10 clubs at a time, right? Like more of these things just need to go faster. So that's like where we have, a huge focus on, at least from a product building perspective. Yeah.
That makes a lot of sense, because I didn't really think about that in the grand scheme of things, where you on the back end, Fractional on the back end, has to manage all of these individuals. And then obviously the earnest money is a huge thing, because I would get people like saying commit, like I'll commit X, Y, and Z. Then when the time comes, it just obviously flake. So with that being said, with the earnest money, quote unquote, the soft commitment deposit down, if they decided like, hey, I'm not gonna commit to the rest, what happens to their funds? Do they
They
forfeit
lose
that?
it.
They
It's
lose it.
non-refundable. Yeah.
Oh, okay. Gotcha. It's non-refundable. So if the soft commitment is like, let's say $500, and the rest is like, I'm going to commit another $4,500 in the next 30 days. Is that kind of how it goes? Like $500 now and then $4,500 later, or how is it like set?
Yeah, it's basically like your deposit, like let's say $500 immediately on the spot to lock in your spot.
Uh-huh.
And that works a lot, especially with deals that are moving so quickly. It's like you will act like we have a progress bar for each project. Like on the Zoom call, like people will refresh their screen and it's like, whoa, like it moves up every single time. And that gets a little bit of like a FOMO mentality too.
Yeah.
So they're like, okay, if I actually want this, like I better lock in my spot now and just like pay the deposit. And then once like we reach the full progress bar, where it's like people have put in the deposits for like the total target raise amount, then like, that gives us the green light to be like, okay, this thing is like actually seriously happening. Like, everyone's committed. So now it's like, okay, we need to go create the LLC. We need to like build the operating agreement for all the investors. So that usually takes about like a week and a half.
Okay.
And we don't have control over like how long the state is going to come back with the LLC and all that. So that's kind of like the part that's a little bit in flux, but usually like a week and a half, like we'll definitely get it back.
Okay.
And then from there, it's like, okay, now LLC is created. Now everyone's signed off on the docs that we've made for them. And then the bank account is ready as well. So then people will send the remaining other funds pretty much like at that 1.5 week line.
And if, let's say, for whatever reason, let's say 2 or 3 people are like did not send the funds and they just said, I don't want to do this anymore, what happens to, let's say, like a $10,000 buffer that needs to be raised left? Do you guys go back to the people that were on the waiting list and say, hey, we have an opportunity for you to invest in this, and they'll come in?
Yeah, the waiting list is huge. That's why like we generally recommend to the operators like, hey, it's actually a good thing to oversubscribe your project a little bit, because I mean, yeah, maybe some people just have an emergency and they like didn't mean to flake on you, but they're like, we just really can't, right? And they rather just give up their deposit, which is rare, but it still could happen. So definitely the waiting list when it's oversubscribed is really good. Worst case scenario, maybe you're like missing 2 investors. You just have to kind of go back out to your network again and just fill up some spots. But by that time, like it's a lot easier, right? Because you're not going to someone with like a brand new project. It's like, hey, I have this project that like is already 98% committed already. Like that's how much faith people have. Like, do you want in? There's only 2 spots. And like, that is a much easier sell than like when you're just starting from scratch anyways, where I would usually say it's pretty straightforward to like fill up any gaps at that point.
Okay. That's awesome. Well, Stella, thank you so much for this amazing, insightful talk about Fractional. Where can people find you, get in touch with you, get a hold of you?
Yeah, well, thanks for having me, first of
Yeah.
all. I love this conversation. It's so much fun. I am on Fractional, obviously. So find me there. I'm like lurking on Fractional all the time. That's like one of my personal favorite things. Is like I feel like I'm kind of like double dipping a little bit
Uh-huh.
because I'm so actively investing. So I'm always like on the lookout for like what other cool people are doing. So find me on Fractional. I'm
Yeah.
always hanging out there. I'm on Instagram a lot too. My
Yeah.
handle is Hella Stella, just to keep it California for everyone.
Oh, cool.
But yeah, reach out to me and excited to connect with everyone.
Cool. I'll have her information in the show notes, guys, or the description. And thank you so much, Stella, for coming on the show.
Of course. Talk to you next time.
Yeah.